Ladies and gentlemen, welcome back to the channel. And in this video, we're going to talk about how to estimate your financial projections for your e-commerce business. So if you're a seller online, if you're selling products or services and you're relying on a website to do it, or on Amazon or on eBay or on Google Shopping, this video is for you if you're looking to put together financial projections for your e-commerce business. Okay, so if you're running an e-commerce business or thinking about starting one, you have to know how critical your finances are to your business. Financial projections are your blueprint for growth, helping you understand your costs, your revenue potential, and your profitability. In today's video, I'm going to walk you through what to include in your e-commerce financial projections and how to create them step by step. By the end, you'll have the tools to build projections and impress investors and guide your business to success. Okay? My name is Nicholas Coriano. I went to business school, went to law school. I've run a few e-commerce businesses. I'm an entrepreneur at heart, but I write business plans, pitch decks, financial projections for startup and established businesses and governments so they can scale their opportunities. So this comes from not just my knowledge in school, but also my 2,000 business plans developed that all included financial projections. And not only what I learned, but also what my clients taught me in regards to developing your financial projections for an e-commerce business. So let's start. Why are financial projections crucial for an e-commerce business? Well, financial projections are more than just numbers. They're a roadmap for decision making. In e-commerce, where competition is fierce, the margins can be tight, and your projections can help you do three things. Number one, they can help you plan for growth. Number two, they can manage your inventory effectively. And number three, they can demonstrate your financial viability to investors or funders. So that's why they're crucial for e-commerce businesses, okay? What are the key components to financial projections for your e-commerce business? Now let's break down the key components for every e-commerce business. Every e-commerce business in their financial projections should include your revenue projections, your cost of goods sold, your operating expenses, your profit margins, and your cash flow forecasting, okay? So I'm gonna go over these one by one. Number one, your revenue projections. This start by estimating your sales, okay? So that's your revenue projections. And you're gonna do this by considering a few things. Now this also depends on whether you're a startup or an established business, okay? If you're a startup, it's a little bit harder. You wanna get back data from another company or base it off of how much your marketing spend is going to be. If you're an established business, you may want to put it based off of past numbers, right? Your past revenue numbers. But in general, there's a few components that you want to keep into consideration when you're forecasting your revenue projections. Okay, so one is your website traffic or your traffic, right? Because if you're not on a website, if you're on eBay or Amazon, or you're just selling off of Google Shopping or Temu or Alibaba, they may show you benchmarks or metrics about your traffic, but you want to consider this because usually your revenue is a percentage of your traffic, right? 1%, 2%, 3%. A lot of times it's less than 1%, guys. So you got to drive massive traffic. But that's one of the key components you need to know to forecast your revenue projections, okay? So that's your website traffic. And then number two is your conversion rate, right? This is exactly what I was just talking about. Is it 1%? Is it 2%? How many people are you converting that came to the website? Now, this varies depending on the quality of traffic that you drive to your website. And what I mean by that is quality traffic is a willing, ready, and able buyer, right? Someone that wants your product. If you sell pool supplies, but the people coming to your website don't want pool supplies, well, that's not quality traffic, right? So number one, website traffic. Number two, conversion rate. You want to come to this mathematical formula. Like I said, if you're established already, you probably already know your conversion rate, which is great because then you just drive a bunch of great traffic to your website and you know that based on how much traffic you get, a certain percentage will convert. If not, make sure that you guys are being conservative when you're putting together your financial projections in terms of your conversion rates, okay? So one, website traffic, two, conversion rates, three, your average order value. This is also known as your ticket, your average ticket, right? So on average, what does a customer spend, right, when they get to the website? So for example, if you expect 10,000 visitors a month and 2% conversion rate at an average order value of $50, let's say, that means your monthly revenue projection is going to be $10,000. Okay, so that's your revenue projection. That's kind of the top line when you're talking about your financial projections. The second thing you want to include when you're putting together your financial projections for your e-commerce business is your cost of goods sold. So this includes the cost of the products that you sell, shipping fees, packaging materials, right? Those are your cost of goods sold. So if you're selling a hat for $20 and it costs you $5 and the shipping costs you $4 and the packaging costs you $2, you're at $11 for your cost of goods sold, and your profit would be, we'll get to that in a little bit. But that's your cost of goods sold, right? It generally includes the cost of the product that you're selling, your shipping fees, and your packaging materials. Okay, that's two. So we just went over your revenue projections and your cost of goods sold. The third thing you want to know is your operating expenses. These are your overhead, right? These are fixed and variable costs of running your business, like marketing, right? Your ads, your SEO, your social media. This can also include your website hosting or any software that you use, right? Like I use Hootsuite to publish things, a social media aggregator. I use Go High Level as a CRM. This software is all an operating expense, right? No matter what I sell or don't sell, that cost is going to be there every month. Another operating expense could be employee salaries if you have employees. Now, if you're a one-man show, there's generally no employee salaries, but you should include your potential salary, right? You don't want to work for free. And then any office or warehouse rent if applicable, right? These are all considered operating expenses. And then based off of those operating expenses and your cost of goods sold, you're going to get your profit margins, right? So you calculate gross and net profit margins, right? So you subtract your cost of goods sold and your operating expenses, and you get your gross profit and then your net profit. Take out your taxes and you get your EBITDA. And this is important, right? Because investors will want to know how much are you keeping after you covered all the costs. So this is really the number that you're chasing after, right? What is my profit margin, right? Every time I sell something, how much of that am I keeping? And what do I need to break even, right? So those first four parts will tell you that. And then the fifth part, when you're putting together your revenue projections for your e-commerce business, is cash flow forecasting. I love the cash flow statement. There's variable statements when you talk about financial statements for business planning or accounting. Income statement, balance sheet, statement of retained earnings. But your cash flow statement is really the crux that every entrepreneur should get cold. It's basically telling you what's coming in and what's going out. This is especially important in e-commerce businesses because of upfront costs like inventory. So to ensure that you're forecasting when your cash comes in and when your expenses go out, you want to put together a cash flow statement. There's tons of templates online that you can download for free, whether it's Microsoft Excel or Google Sheets. They all give you templates. Put one together, right? And at least forecast your next 6 months to a year so you can see how money comes in and comes out. Now, if you're a drop shipping business, a lot of people think, well, I don't have inventory expenses. I'm a drop shipping business, right? A lot of e-commerce businesses love drop shipping businesses or affiliate businesses. Well, you still want to have a cash flow projection to know how much money's coming in and how much money's going out, right? Because then you can say, all right, at month 6, I'll have this much in the bank. At month 9, I'll have this much in the bank. And at month 12, I'll have this much in the bank. And then I can spend more on marketing, or I need to spend less on marketing, right? So the fifth thing you want to do when you're putting together your financial projections is make sure you have cash flow forecasting, or what they call a cash flow statement, okay? So a step-by-step guide to building your financial projection. Here's a simple way to create financial projections for your e-commerce business. Number one, estimate sales, right? Use tools like Google Analytics or Shopify reports to analyze traffic and conversion rates. Factor in seasonality and trends, right? Some products sell better in the summer than they do in the winter and vice versa, right? So step one, estimate sales. Give it a high, a middle, and a low. And I always like to go with the low number, right? So you're being super conservative. And then step two, calculate your direct cost, right? So this is the cost directly associated with your products, right? This is what we talked about before, which is how much does your product cost? how much does it cost to ship it, and how much are payment processing fees, right? Anything associated. By the way, people always miss payment processing fees, right? If they're taking 1%, 2%, 3% every time you have a transaction, that adds up, guys, right? So I mean, I remember the first time I made $100,000 and I looked at the end of the year and it was $3,000 in payment processing fees. Like, oh my God, $3,000. Now all of a sudden that 1%, 2%, 3% mattered, right? Because if I can get it from 3% to 2%, it was $1,000 I was saving. So step one, estimate sales. Step two, calculate direct costs. Step three, account for your marketing expenses, right? E-commerce businesses, in large part, are a marketing expense. Some of them not so much. Like I said, if you're on eBay or Amazon, sometimes they do the marketing for you. But make sure you're covering your marketing expense and you're subtracting that from your revenues. And this could be a budget for ads, it could be influencer campaigns, it could be social media, it could be content creation. There's a lot of different ways you can drive traffic. Whatever it is, quantify it and make sure you put it in step three to subtract it from your revenue. Number four, add fixed costs, right? So now you got the fixed costs. We talked about this before, your software subscriptions, your office space, your employees, your hosting fees. Any of those expenses that stay consistent are considered fixed costs. And now you're going to subtract it, and this is what's going to create your cash flow statement, right? So you're going to forecast cash flow. So you're going to do this every month, month by month, and say, I think in month one, I'm going to have this sales, month two, I'm going to have this sales, so on and so forth, all the way up to 12 months. And then you're going to subtract all those things I told you to subtract every single month. And at the end of the month, you're going to have a balance. You bring that back up to the top of the next month and add that to your sales for that month, and then subtract your cost, right? And then you're going to have a balance. You're going to grab that balance. You're going to put it at the top of the third month. You're going to add your sales. You're going to subtract your costs, and you're going to have a balance. And you're going to go ahead and do it again and again and again for the next 12 months. Okay. So, really quick, some common mistakes to avoid when you're putting together your financial projections. Number one is overestimating website traffic or conversion rates. Always use conservative estimates. If you've read a lot of blogs out there, if you've had experience, you realize that a lot of the conversion rates are super low. Don't get discouraged when you see super low conversion rates. Really, it just means you have to drive way more traffic to your site, but 1%, 0.001% conversion rates are pretty common in e-commerce. So if you see that, don't get discouraged, but don't overestimate it. Don't think I'm going to get 100 people to the site and 25 are going to buy. That's a 25% conversion rate. Highly unlikely unless you have a super targeted traffic that that the people coming to your site definitely want it. But in most cases, in most e-commerce businesses, that's just not the case. They're going to come to your website and you're going to have a very small conversion rate. So be super conservative when it comes to how much website traffic you're assuming will come in and how much the conversion rate is going to be. Number two biggest mistakes that people make, forgetting hidden costs like returns or refunds or chargebacks. This can crush your cash flow projection or your financial projection and your business in general if you don't account for it, right? So, those hidden costs, like I said, like transaction costs, if PayPal takes 2% or if MasterCard takes a certain amount, or if Stripe takes a certain amount, right? So returns, chargebacks, hidden costs like that, refunds, factor in a certain percentage, right? That you're going to get refunded returns or chargebacks that are going to come off of your sales projections. And number three, the biggest mistakes that people make when they're putting together a financial projections for an e-commerce business is underestimating the marketing spend. It's often one of the largest expenses in e-commerce. I remember when I started one of my first e-commerce businesses, I was like, well, it doesn't really cost me any money to do social media marketing. Well, it costs you time, right? And then all of a sudden I had this subscription to make this kind of content on Canva, right? And I had this aggregator to put out the content and schedule it. Well, that was an expense, right? And then not just those expenses, but then my time expense, and then every time I use somebody on Fiverr. So don't underestimate your marketing spend. It's often one of the largest expenses in e-commerce, right? So keep an eye on that when you're putting together your financial projections for an e-commerce business. So, some of the tools to simplify your financial projections, you don't have to start from scratch, right? Your Shopify reports or analytics for revenue tracking can help. Amazon gives you reports on your sales and traffic. Excel templates have great templates for detailed financial projections. Financial software like QuickBooks or LivePlan create investor-ready presentations. Those are all fantastic. Google Analytics and Google Shopping, Google Merchant Center, I think it's called now. give you great data. PayPal gives you great data and great reports. Use that data as a baseline for your financial projections, okay? So to recap, uh, creating financial projections for your e-commerce business involves estimating sales, calculating cost, forecasting cash flow, and tracking profit margins. These projections are essential for managing your business and attracting investors, okay? So if you found this video helpful, please hit that thumbs up button, subscribe to the channel for more financial projections and e-commerce tips, business tips, entrepreneurial tips, and tips that can help small businesses, small governments establish themselves, grow in various sectors. I'm always talking about business moves, feasibility studies, business plans, financial projections, pitch decks, selling investors, selling stakeholders. So if you like that sort of thing, you're into business, you're into that kind of stuff, subscribe to the page, hit the thumbs up button, and share this if you have somebody that has an e-commerce business that this would be useful for, okay? Thanks again for watching, and I hope you guys have a great day. I'll catch you guys on the next video.